Hello, welcome back. Good morning, good afternoon, good evening. Welcome back to Wealth Reimagined on the Family Bloodline Network. I'm your host, Maya Kay. So excited to be back. A little late start today. I had a very nice weekend. Shout out to all the moms. Happy belated Mother's Day. I hope that you had an amazing day, no matter how you spent it, whether it was restful, peaceful, pampering, whether you got out and you were active or got treated to a meal or whatever, massage. I mean, it's endless, endless, endless. It always just depends on what mom wants, what mom maybe even needs. Sometimes mom just needs a day to do nothing. Just leave me alone. Let me be in the bed all day in my robe in the bed. I don't want to move, right? So it just depends. But happy belated Mother's Day to other moms. I personally had a great day. I have two daughters, ages new 18 and almost 16, and had a great day with them. Had some breakfast and then got some flowers, some candy, even got a bonus gift. Wasn't expecting to get a bonus surprise from the love of my life. Then got more flowers and some candles and some candy. Um, and what else? What else? Oh, then I got ready. I got to dress up a little bit, nothing too flashy, and was taken to dinner by my daughters. And so that was a lot of fun. And we got to have a meal and chat and laugh and, just hang out. I love getting to hang out with them. They actually are very busy. They have very busy schedules to be teenagers. And so I always love when we can make our schedule all line up so we can actually do something. So I'm grateful for days like Mother's Day that kind of puts that in place for you. So it was great to do that. And then after the meal, I went to the gym with my oldest daughter, who is so strong. Oh my goodness. My little girl is strong. She was showing me the ropes and getting me ready to start weight training more than doing cardio. Because if you know, we need to weight train. We need to be weight training. Cardio, not so much anymore. Weight training. If you know, you know. So had a great day there, and don't want to forget any of you who where Mother's Day isn't as I guess a celebratory time, and it's more um, of a challenging time. It's more of a challenging time. I don't want to forget all of you who have lost your moms, um, or you're estranged. You're estranged from your mom, and so Mother's Day can also be challenging for people. And I want to say a shout out to you and hope that you found a way to get through the day. You were able to surround yourself with love. You were able to possibly meditate on that relationship and think through things. And maybe you are sticking with your decision to be estranged, or maybe you are considering reaching back out with some type of boundary in place. Or, again, if your mother is no longer here, I hope you were able to really think of some of the memories and the things that uh, your mom taught you and things you were able to laugh about, just funny moments. So shout out to everybody for Mother's Day. So let's get into the topic for today. Again, I like to try to keep these, within 30 minutes so you have time to listen, get some tips, some ideas, hopefully to help support or help you start your financial journey, goal settings, mindset. We're going to dig into a lot. There's just so much to discuss when it comes to financial literacy and personal finance in general. So today I wanted to talk about how to start an emergency fund, especially when you're feeling behind already. And I feel like it's a very timely topic with just, again, I mentioned last week, just we're just being pressed so much, just squeezing every little penny. Pennies are going to be going away, right? But squeezing I'll say every penny, every dime out of you for some type of whatever. I mean, life goes on, right? Like we can't um, control that gas goes up every day. We can't control the cost of our food is going up. Um, those are things that are out of our control, but we are still forced to try to live each and every day and make it every day and be able to show up and perform the same when we have these things and these concerns in the back minds, and it can just make for a much more challenging experience. How are you doing? How are you really doing? Like, have you thought about how you're doing, or have you felt different? Do you feel less patient? Do you feel like you have a shorter fuse? Is everything good? But this type of just being pressed the way we are and being squeezed can have an impact on how you show up, how you're responding. Um, you know, Something somebody may ask you at one point, it could have been an easy answer, but now it frustrates you. And so just really um, think about if and how you're being impacted by how the economy is stretching you more thin each week, each day. There's always something, right? And so, just to when we get into these situations, sometimes things happen unexpectedly, or we are running out of funds. We're running out of funds. And what I don't want anyone in this community to run into is running out of funds because you weren't prepared. You weren't prepared for that emergency, that unexpected event that is never a matter of if it'll happen, it's when. It's always when it will happen. It will. It will happen. You're going to have an unexpected event. You're going to have an unexpected emergency. You're going to get an unexpected call. Like, these things will happen. It's just a matter of when it will happen. And so I want to talk about having a starter emergency fund. So I'm sure you've heard of one. I'm sure you've heard of an emergency fund. So I've been doing this whole, like, let's see what it says the definition is of an emergency. And I've been doing this because I have a new adult child. And, I'm like, there's multiple definitions for that, right? So let me see. I think I have it up still. An emergency. First, I looked up what's an emergency, right? Well, how is it defined? And so it says an emergency is a sudden, unexpected, and dangerous situation that poses an immediate risk to health, life, property, or the environment, requiring urgent action to prevent a worsening of the situation. So that is the definition of an emergency. But I wanted to get a little bit more specific because we're not just talking about a general emergency here. We are talking about a financial emergency. So I thought, hey, let me see what it says for financial emergency. And it says, it is an unexpected, urgent, and necessary expense or loss of income. A financial emergency is an unexpected, urgent, and a necessary expense or loss of income that exceeds available cash, threatening financial stability. A situation that requires more cash than you have and threatening your financial stability. Common examples: sudden job loss, major car repairs, medical emergencies, or urgent home repairs. Summer's coming up, right? We're going to want the air to work. HVAC, want to make sure it's gonna last the whole summer. Depending on where you live, it can get up to some really high temperatures that forces that HVAC to work even harder. So these situations often require immediate funding, such as an emergency savings fund, and that's what we're going to talk about today. So there's two types of emergency funds, right? There's your actual, like, there's an actual emergency fund that you should have in place that holds 3 to 6 months of expenses. And I don't know what that number is for you, right? But I'm all about goal setting. So your 3 to 6 months could be a bare bones 3 to 6 months. It could be it could be just 3 to 6 months of income where you at least have your income. It could be 3 to 6 months of all of your expenses so that you feel no change in how you're living for 3 to 6 months, right? It could be a variety of those types of things. It really just depends, right? I always say there's no one size fits all. There's no one size fits all to anything. And it's no different with your finances, right? Because there's going to be the same rules and suggestions and tips that everybody can take. But then what that actually looks like depends on your situation. It depends on how much money you have. It depends on how much debt you have. It depends on how much expenses you have or other needs, right? It just will vary, right? But the overall goal is to have that big emergency fund in place, right? But you got to start someplace. And so we're going to talk about a starter emergency fund today. A starter emergency fund is a much smaller emergency fund. And I always say the minimum starter emergency fund you should have is $500. And I know for some that sounds like a lot, and for some that doesn't sound like enough. But $500 is better than nothing. If you're a listener who does not have anything saved, you don't have a savings. Your savings account don't even have $100. Then you want to do at least a $500 starter emergency fund. And the purpose of it, right? It's a dual purpose for your starter emergency fund. First of all, its purpose is, of course, what it's called. It's to handle an emergency. The other purpose of it is so you can stop borrowing money and creating more debt that you have to pay off. So that there's two purposes to it, to me. To handle those emergencies so you don't have to use a credit card. So again, starting with $500 could help you do that. $500 oftentimes is even maybe the amount of your car deductible if you got into an accident. Do you have $500 in case you get into an accident and you have to pay a deductible with your insurance, or do you not? Like, how would you come up with that? Would you charge it? Would you go to the bank and borrow it? Would you go to Payday, Loan, Speedy Cash, somebody like that? Not promoting them at all. They're trash. So you want to at least have that $500, and that's like a great starter. I don't want you to feel like you also have to do this ASAP. You want to do it as soon as possible, but you can build that over time. So remember I talked about SMART goals? So let me get my calendar up. I'm going to use my phone to get my calendar. Alrighty. So let's assume you're paid twice a month. Will this work like this? Oh, it will. Hopefully it didn't mess up anything. All right. So let's say you get paid twice a month. And so you want to put some money aside to get to your $500. Your $500. And let's say you want to have $500 saved within 3 months. So in a 3-month period, you'll get 6 paychecks. So all you're going to do is take $500 divided by 6. That's $83. $83. And I would just round it to 85, right? But $83. Each time you get paid, pull out $83 and put in your starter emergency fund. That doesn't seem like a lot, but it's going to build because you're going to set a goal. Once you get it to $500, celebrate. Don't celebrate by spending the whole $500, but celebrate. It's a win. It's a financial win. Celebrate. I don't know. Go buy yourself a candy bar. I don't know. But just a small way to celebrate that you reach this goal. It's important to celebrate small wins. It really is. Once you get it to $500, I want you to do it again. Keep going. Get it up to 1,000. I personally had a $1,000 starter emergency fund probably for like 2 years. And I remember when I first got it set up, I had $1,000. And this is when I've started my whole journey to get out of debt. And I'm like, I'm not using credit cards anymore. I don't see the point. I don't know why I would pay somebody to use some money. I don't believe in paying interest. I don't believe in paying interest anymore. I just don't. And so I'm like, I don't want to use these credit cards. I made mention that technically you're supposed to use a credit card by paying it off every month because you never pay interest. I don't believe in paying interest anymore. So I got my $1,000, super excited, feeling all accomplished. I'm like, cool, I got my $1,000. And what happens? My washing machine broke. It broke. It was something where it wouldn't drain. And they had to come out and replace some part in it, and it's been working fine now. But it really felt good that my washing machine broke unexpectedly, but I didn't panic. I was able to remain calm because I'm like, well, that's what the emergency fund is for. Cool, calm, and collected, as they say. That was me. I didn't have to worry about it. And so that felt good. That felt really good. And I like that feeling. I like not just feeling, oh, what am I going to do? Let me see if again, I had already made the decision I wasn't using credit cards anymore. But I didn't feel like, oh, let me go see if I can borrow. I need to get it fixed, or oh no, let me go see how much another one costs, and I don't have money to buy another one, and so then I end up having to maybe open up a card to get it, and I didn't have to worry about any of that. And so it was a really great feeling. Really just, I don't know, I just felt like I kind of had it together, because I didn't have to worry. I was just like, okay, machine's not working. Let me enter in my service request, see when they could come out, and pay cash. Meaning I didn't charge it. Meaning I didn't have to borrow. Borrowing is also using a credit card. And it felt really good. So anytime you have to use money from your savings account, then you got to put it back. So I don't remember how much it was now. Maybe 400 something dollars. I don't know. Let's just say it was $400. And so I needed to put $400 back. So then I got back to my budget and made some shifts. Because I'm like, okay, I got to build my emergency fund back up to its $1,000. Because again, its purpose was just so that I wouldn't use a credit card if there was an emergency. And that's what I want for all of you, really. I don't want some unexpected event to throw you off course, because it feels good to have that under control. It really does. It really does. So start an emergency fund. Again, I put my notes that it should range from $500 to $2,500. And you can choose how you want to build your goals, right? Build up to that goal. If you are a visual person, draw like a little thermometer. You know how when you were in grade school and there would be a fundraiser and they'd have the little thermometer, and the more money you raise, they'd fill it in red, right? They put the little red block there to make it look like, oh, we reached our goal. I mean, you can do that. If you're a visual person, I like doing stuff like that. It motivates me because I can see like, okay, I'm almost there. I was down here and now I only got this much more to fill in, right? So if that's something that you need to do, you can draw that on a piece of paper. Look, this don't have to be fancy. This doesn't have to be fancy. You don't have to spend a ton of money to be able to get your financial situation in check. Get a Post-it. Here, I'll do it right now. Post-it. I'm not an artist. $500, $400, $300, $200, $100. $0. $100, $200, $300, $400, $500. I'm not an artist. Put it on your desk. Put it in your wallet. Put it on your monitor. Put it on the back of your phone. I don't care where you put it. But if you're a visual person, do something like that. And as you get to it, fill it in. You got $100 in there? Cool. Make it on Canva. I mean, whatever you need to do. Whatever you need to do it is all I'm saying. So thanks for sticking with me as I had my little drawing break there. So, but point is, do it in small steps. You choose the increments, $100 increments, $250 increments, $500 increments, etc. $50 increments. It just depends on you. It depends on you and how much money you have available to start doing that. Last week, we talked about money leaks and trying to create some breathing room, right? And so hopefully you were able to do that. And hopefully you see how this is all kind of progressing. And so where some of that breathing room money that maybe you were able to locate, you can take some of that and start this fund. This fund is so crucial, so crucial. The other thing that is good to know is, so where do I keep it? So I have this theory about the spender and the saver, right? So I'm a saver. I do not like spending money. I will spend money, but I get frustrated spending money. If I'm out all day, or I'm really sometimes just taking care of things that need to be taken care of, I get to a point where I'm like, I am so tired of spending. I don't want to spend anymore. I'm tired of spending money. I don't like spending money. Um, but I like saving it. I like saving money. I like for my money to be sitting there and I can see how much is there. That's what I prefer. And so, what are you? Are you a spender or are you a saver? And a lot of times in relationships, you are with someone who's the opposite of you. And I think that's true for me too. So I'm the saver. So let's talk about the spender. How to do all this, right? Like how to get all this going. For the spender, I think you should absolutely set up some type of automation. You should automate this, out of sight, out of mind. Out of sight, out of mind. And you need to set it up. You can set it up through payroll at work. You can set up a automatic transfer. Let's say you don't want to do it through work. It's an easy process at most places, but at some places maybe it's not as easy. And or you can set up automatic transfers within your online banking. You can set up online external transfers. So let's say you get paid and it goes to your checking account, and because you're a spender, you will be tempted just for moving it from a checking account to a savings account at the same financial institution because you can see it. However, there's a trick for that most of the time as well. You can hide what accounts you can see on your summary. And I've done that. I've done that before, where you could have the other account at the same bank. You could set up the automatic transfer to occur every time you get paid, assuming you've already done your budget and you know that you have the money to do that, right? But then you can hide that account from your view so you don't see it. Out of sight, out of mind is the best approach, in my opinion, for a spender. So set it up automatic to just do it. Where that way you don't have to do it. That way you don't have to say, all right, I know I'm supposed to move $50. I know I'm supposed to move $83, $85, or whatever the amount. I know I'm supposed to do it, but dang, I don't. I'd rather, I really, all of those prompts, right? You fill in the blank. So if you're a spender, I think automation is the best way to go. If you're a saver, I think that you can also do automation. Savers, you could do that as well. You could also do envelope system. So you could pull money out and keep it separate and put it in an envelope. There's all kind of cute saving binders. I'm going to grab one. Hold on. Okay, so it took me a minute to find it. Wasn't exactly where I thought it was. But there's all kind of little cute things out there. $1,000 savings challenge. And it just has little envelopes. I never actually wrote on it because I wanted to be able to do it multiple times. But each little envelope in here, you can put $40 in, right? And once you've completed it, they'll have 1,000. And so little things like that. They even have some smaller, because I got my daughter one that was like $250 little envelope like this. So I could get her started to save early and just build that habit. But yeah, you could do something like that. You don't even have to do that. That was really inexpensive. Though that one and the one I got my daughter, you could just do it in, oh, I wish I had one up here. I didn't think I was going to have props. I apologize. But I have some little clear envelopes as well that you could just put cash in and put it in a little binder. So one day when we're going to have an episode where we talk about cash envelope systems, and I will have all that up here so that you can see it. But I believe that envelope systems are great for savers because you like to see the amount of money that you have. You like to see it build up and grow. And so it's a great, great visual to just have all this money in your hands, right? Sometimes you got to make yourself go put it in the bank because you don't want to have cash in your home like that. Also, you're not getting any interest on it so that it can grow faster. That kind of leads me to my next point. So those are things I want you to think about as far as if you're a spender or you're a saver. But where should you put it, right? I'm automated. Where am I going to put it? Am I going to put it in a regular savings account? Sure, you can. You could put it in a regular savings account. You could also put it in a high yield savings account. The difference, regular savings accounts aren't paying as much dividend rates as your high yield savings account. So there's different types of high yield savings accounts out there. There are some. So let's say you're going to do a mini starter $500 emergency fund. There are some high yield savings accounts out there that are paying like almost 5%. 5% is a lot. In case you aren't familiar with dividends right now, dividends at most financial institutions on savings accounts, regular savings accounts, are not even paying 1%. They're not even paying 0.5%. They're paying like 1/10. And so 5% is a lot. So there are some high yield savings accounts. I would encourage you to Google and look up the ones that pay you that 5% APY until you get to a certain amount. So there are some that are paying that high amount until your account gets to 2,500, right? Something like that, which once your account gets to the amount to where it's no longer paying you that high dividend, put it somewhere where it will, right? So it's just a game, who's going to pay me for me to put my money there? But those that give you that higher high yield savings for the smaller amount are a great way to help you get to your goal faster. And that financial institution is helping you get there. Why? Why are they paying you to put your money in their bank? Why are they paying you to put your money in their bank? Because that money is what is used for loans. And that's how banks make money, by lending it out. So find those to help you get to your $500, to get to your $1,000, to get to your $1,500, to get to your $2,000, your $2,500, right? Find those that are going to help you get there faster and pay you more, pay you a higher APY. Then there's those that are paying that high APY on any balance, right? And so just think about your situation. Do you want one that's paying it from the start, no matter how much is in there? A lot of those are online, like online financial institutions. A lot of financial institutions that are online only pay higher rates regardless, because they are not having to have the expenses of keeping the lights on in a building, brick and mortar. They don't have that. They don't have to pay water and lights and security and all that for all these multiple branches. So the online banks will be paying more. So high yield savings accounts are great places to put your starter emergency fund. And so I would encourage you to do that. But before I go, because we're about over on time, it appears, and I said I want to keep you about half hour. Before I go, though, I really want to dive into the part that is most important to me when it comes to anything financial. And that's your mindset. You have to set a boundary with your emergency fund account. You have to set a boundary with it. It can't just be, you can't use it as a spending account. You can't use it as a spending account because that's not what it is. It is for emergencies. Remember, we talked about when we looked up the definition of an emergency. It is specified for an emergency. It does not, if it does not constitute an emergency, then the funds in this account are not available for that. You have to be disciplined. This is probably for the spenders more than the savers, but you got to be disciplined. You start seeing this money building up in this account, and you have to remember why. It has a purpose. That money in your emergency fund has a purpose to be able to handle any unexpected emergency when it happens. It's never if, it's when. And so that you do not borrow and get yourself into either more debt or debt, period. So you have to set a boundary. You have to respect your own boundary. You have to respect your own boundary that you have set, and not dig into that account unless it's an emergency. If you are in a couple, like you're partnered or married, you should have a discussion about what will constitute an emergency for us to use this account. And that would be another, episode about, money with your love. It is a source of many arguments and can lead to a lot of separations and divorces, honestly. And we don't need that. We got enough problems. We don't need to add that layer, right? And so it's really about having real conversations. And I hope I can be a part of that journey, as we really dig into the mindset and the psychology of maybe why or why you don't do certain things when it comes to your finances. But when it comes to this emergency fund, you got to set a boundary. This account is strictly for emergencies. And so that I do not have to use a credit card that is charging me 30% APR. Ridiculous. So really start there. Start there. Start with the mindset. I'm going to set this emergency fund. This is just a starter emergency fund. $500 to $2,500 really isn't enough to prevent me from financial crisis. However, it's a start to handle those unexpected emergencies and to prevent me from going further into debt. Really get that in your mind and believe that. Adopt that as your belief so that when the temptation comes, right? The temptation comes and somebody's like, yo, guess what? I heard that we could go to Hawaii and it's only gonna cost $2,000 a person round trip, all inclusive. And you got $2,000 in your emergency fund. That's not an emergency. That's not an emergency. That's not an emergency. But we are going, as keep listening, because we're going to get to um, conversations about having accounts with money in it. You might have heard me talk about a sinking fund briefly on a different episode. You're gonna be able to take that vacation next time that opportunity comes around. So I hope this was helpful. Let me know if you have questions. Leave your comments, and really take this time to think about how you want to approach things differently, how you want to handle things differently. Like I was saying at the beginning, how are you doing? How are you doing? And how is all that's going on around you impacting you financially, but more so just mentally and your stress? And how are you managing that? And how can we take a hold on a little bit of something that we can have a little control over? We just have to realize how these other dynamics and other factors impact how we're feeling and how we're going to react. And so that's what you want to get a hold on, because there are other life areas that have a major impact on your financial life. There is a correlation. There absolutely is a correlation. So that's all I got for today. Again, hope this was helpful, and tune in with me next Monday as we dive into the next topic. So like and subscribe if you haven't yet. And stick with me. Let me know if there's also some things that you want to talk about, but hopefully you can see how things are kind of progressing in our discussions now. So again, thank you for watching. Thank you for listening. Wealth Reimagined on the Family Bloodline Network, where we are discussing financial literacy for real life discussions, real life matters. And again, I'm your host, Maya Kay. Thanks for tuning in, and you all have a great day.